Well, let's jump right in and talk about that corn market. We have been on beans as of late, but let's move over. Talk about the corn. I'm going to go up and check out our fields this weekend, see how things are moving along. Maybe even get in the combine, who knows? But overnight we're lower. We've had some backfilling in the corn. I think that the key for Dees corn now is around that 360 level, which is that 200-day moving average, which has moved down a little bit here. So keep an eye on that. That's going to be something that's going to be what the technicians will look at. I still feel like the producers, the farmers in the field, feel like this market could take another leg higher. That's just going to be their normal bias. But right now it's just on the defensive, and we'll see if we can't change that up. We've got a production report again in about 8 business days, so keep an eye on that. That's going to be a big thing. But right now, a little bit of backfill. Market's just kind of trading heavy. What's the good news? Well, we're still 40, 45 cents higher than the contract low. There was a point in time this year that we were staring at Satan's eyes, it felt like. So it's good to see us kind of reject those lows, as I guess is the best way to put it. But as an old trader, you have to kind of think, what's going to propel us to new highs now, right? What's that going to be? We're going to have to get some confirmation of lighter yields. We're going to have to get some confirmation of less production. We're going to have to start to get more and more of these stories to come through. And the USDA can be the one to help us do that if you're a producer and want to see higher prices. So you need to be getting that risk down on paper and kind of being careful about being too overexposed and too comfortable when you see something like this rally like it has. So we're still kind of spinning around the 25% pullback. That's what those technicians look at. So we've pulled back 25%. We're kind of looking at that level right now. It's like 365. We can't really make our minds up. Again, that 200-day moving average is around 360. Keep that in mind. We're 50 cents off the 6-month high of 379, which I guess would be the good news. And we're still well above the contract lows, which would also be better news because I know there was a time this year we were thinking about corn with a 2 in front of it. So it looks like we've rejected that with that drier weather and the lighter yields. We'll see if that production number comes our way. But we just don't want to have too many guys on the same side of the boat, right? I don't want too many people hoping for a decent number because hope's a bad business plan. So again, a little bit of backfilling. I think the things we have to look at is that 25% pullback in that Dees market. That Dees chart is going to be that 365 level. That 200-day moving average just below a 360. Those are going to kind of the things that I'm going to look at to see if I can get a little bit more of a better feel going into this production report. And then, obviously we've got pandemic and the elections and all the other things that kind of float around it. So you can't really ignore those as well. But really when you want to get down to the brass tacks and the fundamentals, that's what we're looking at. So keep that in mind. That'll give us a short-term map going forward. I'll check back in with you later.